The market sell-off continued today as Jay Powell's comments and testimony continued to shock the markets as the investors started to realize three things that they were not pricing in and planning for before. Number one, that the Fed's terminal rate has to go higher, probably 6%, to get above inflation, to bring inflation down, to correct the job market, housing market, things like that. So investors were not pricing in the terminal rate to be as high. The second thing, markets and investors were betting on the Fed pivoting by now, not only stopping the rate hikes, but completely pivoting potentially and starting to stimulate the market, because the third thing is that they were betting on a recession happening and hitting by now at this point, but it's a little early for all of that yet. So that's kind of what was going on. The markets were betting on those things, had those things priced in, and now Chair Powell came out yesterday and said that, or indicated that, a 50 basis point, well, he didn't use the word 50 basis point. He just said that a more rapid pace of tightening and hiking may be required, and they're going to remain data dependent. And looking at the data that's supposed to come out the rest of this week and next week with CPI, things like that. So Powell changed everything this week on the market's view of interest rates. Federal Reserve Chairman Jerome Powell set out a new paradigm for how the central bank views its policy path, one that apparently will see even higher interest rates for a longer period of time. Markets now strongly expect a 0.5 point increase in March and the peak or terminal rate to hit close to 5.75 before the Fed is finished. Again, it's going to be above 6%. This isn't going to get it done, 5.75. You got to get above inflation to bring inflation down. What changed was the January inflation data, plus the signs that the labor market remains remarkably strong despite the Fed's effort to slow it down. So if we get another hot CPI print and we continue to get strong jobs data, they're going to go 50 basis points, and they have to in order to maintain credibility. Some people are criticizing, saying if they increase after doing 25, that reduces credibility. Actually, they're wrong. The Fed said we're going to respond to data quickly and swiftly, and if they increase the rate hike to 50 basis points, that shows that they're serious. So now the investors can continue to count on what the Fed is saying and that they are taking everything into consideration. So we have clearly had a choreographed chorus of Fed speakers for 2 weeks that was getting us into this place. At Art Hogan, chief market strategist at B. Riley Wealth Management, it took Jay Powell over the course of a very brief period statement and a Q&A to get those expectations cemented into a higher place. So lots of little talking points coming out of the Fed meeting past couple of days, and other things, Silvergate Bank and San Francisco Bank, Signature Bank, or San Francisco Bank in Palo Alto. A couple of banks are looking at failure. Good old-fashioned runs on the bank, closing them down. So they're starting to see some things and some cracks in the markets. But again, the markets were betting on the Fed jumping in and rescuing the market, and they really don't have any reason to. Inflation is still high. They haven't been able to get it down, and unless something really serious happens, they're just not going to come in and stimulate the markets at this point. They just can't, because everything is so much out of control right now. But here is the Dow. Let's go ahead and put on the daily moving averages. The Dow closed below the 200-day, so it's been holding support above the 200-day. Finally checking this M pattern, closing below. So if things continue, if we get a hot CPI print and things like that, markets will continue to potentially go down, retest these lows back in October. That's a long way off for the Dow. NASDAQ, not quite to the 200-day yet, found support here. So big test coming up next few days to see if the markets continue this or if they get a little bounce and consolidate here, waiting for the next Fed meeting. S&P losing the 200-day, so has the SPY and the triple Qs are not quite there yet. So we'll have to continue to watch and see what happens there. The VIX had a nice little pop today. And again, this VIX has been pretty reliable whenever it gets down to that 17, 18, 19 level. Typically, there's a pop in the VIX. So that's where the market's been kind of ranging along. So looking for that next volatility event back up into the 30s, which would can signal a significant sell-off. The Dixie kind of hanging out, ranging, 10-year dropping a little bit, still hanging out close to 4%. Finding support in this W pattern here. So we'll have to see how that works. It's not typical that markets would be declining and, the treasuries would be up. So, a lot going on that investors are trying to digest out there right now. Here's Bitcoin. testing the $20,000 level that we talked about yesterday, this area here. And, obviously if it breaks the 20,000 level, then the most likely outcome would be, a retest, finding support down in this, 15.7, 15.6, to $18,000 range. So that could be the next stop for Bitcoin, would be to fall right back into this range here where it tested the upper levels. It was about, 18,500, 17.5 to 18,500, somewhere in there. So Bitcoin could very likely make that its next consolidation point before breaking low, retesting low. So let's put the moving averages on this. And the interesting thing here, Bitcoin is getting ready to test that 200-day moving average again. And it was held down by the 50-day right there. And we know what happens whenever it loses the 50-day, and especially when it loses the 200, it generally goes on to a deeper decline. Let's put this on the weekly, because that's what's really interesting. So on the weekly, this is your 50-week now, and the red is the 200. The blue is the 100-week moving average. So Bitcoin losing support at the 200-week moving average, which it's never done before. That's always found support on the 200-week. When you look at the history of Bitcoin, only in the pandemic, it briefly broke down below and came back up. So it's never lost support under the 200-week, much less twice. So that second rejection is very interesting. And, it's kind of a warning shot for Bitcoin that it's definitely most likely probable that it's going to go down and retest these lows. It's not guaranteed, but it's likely and it's probable. So if you missed a buying opportunity here, you'll probably get one again, but it could potentially go lower. So you have to be prepared for that and then wait it out down here, because if it does break below this level and go down in the 9,000, 10,000 range, or 12,000 or $14,000 range, it might hang out there for a while, for a good long while, until, the dust settles, the economy clears and things like that. Then you got to figure out, well, how are you going to buy it? Are you going to self-custody? Are you going to hold it on an exchange? Things like that. And of course, had this discussion today, not your keys, not your Bitcoin. So self-custody is the only way you can pretty much assure that it can't go away. Of course, you can still lose your keys and things like that. But what's interesting about losing the 50-day is that the last couple of times it wrestled with it after a big bear market, it broke up above and then lost it right here and went down to check that 200-day. But 2014, this area right here looks a lot like where we're at, where Bitcoin kind of went down, put a low in, based for a little while, and then tested that 50-day or 50-week moving average and just kind of rolled over and followed it down and went in and put a new lower low, but not much below that previous low, checking that double bottom before it, consolidated for a little bit and then went on a run. Of course, conditions are way different this time, in a lot of ways, with inflation, financial conditions, just everything is way different. That was a stimulative, economic environment back then. The Fed was, keeping interest rates low, pumping liquidity in the markets. Here's the Gaussian channel again, rejected off that Gaussian channel, never really found support on the weekly in that Gaussian channel, never done that before either. Like it's doing right now. Well, this area right back in here again, 2014, 2015, looking just like it. I mean, this one didn't do it before. This one has rejected the lower level of Gaussian channel. The 200-week average, that has not really stayed below very long, but, rejecting off this, rolling over. So, what's the likely outcome? Could potentially go in and retest these range lows here that we've been talking about and looking at for the last couple of weeks here for Bitcoin and crypto. Let's take a look at it on the hourly. Looks pretty ugly on the hourly, getting a bounce, where it should be getting a bounce. But when you look at it on the hourly, it looks pretty clear that, this whole range here was, a pump to distribution, a pump to distribution, a pump to distribution, and still distributing, and now just finally running out of steam and rolling over, catching a little bounce here. So we'll see if it hangs on there. But this definitely looks more like a distribution pattern. This was a obviously a manipulated move here. Not a lot of retail buying, not a lot of general, investor buying. This could be, Tether, Binance, big investors just kind of juicing the markets, doing a lot of different things, a lot of stop liquidations, a lot of short liquidations, stop hunts, things like that, getting people really bullish, driving them into this area here just to distribute. Now it's just rolling out of steam, running out of steam, and just kind of rolling over. So, not, like I said, we're not in a bull market again. This whole thing here was a nice bear market rally, nice rebound, little, accumulation phase here to distribute up here, a little accumulation phase here to distribute up here. accumulation in here to distribute up here. I mean, that's kind of what we've been seeing all along. So I think, once we get confirmation down here, whether these lows are going to hold, then I think you can look for longer term consolidation and then decide, if you want to make some long-term plays. And of course, all of this depends on traditional markets, the economy, what the Fed's doing, geopolitical events, things like that. So a lot of things at play here. So those are the things I'm looking at. Again, this channel is all about entrepreneurship, real estate investing, real estate development, starting businesses, buying businesses, investing in businesses and assets to generate cash flow so that you can grow and scale your wealth and sustain it for generations to come. So that's what the channel is all about. I'll see you in the next video.